10-year note Treasury yields remain in the midpoint of the recent range going back to mid-November. We're holding between 170 and 190. Right now we're at just around 180. And the market seems like it's waiting for some kind of catalyst, a moment, some trade or some news or event that's going to be coming down the pipeline. And we've got plenty of that coming at the end of this week into the next week. But right now the range is holding. Yesterday's trade saw a move towards the bottom end of that, bottom end of the range. We have quickly bounced off that. Obviously, a lot of it has to do with positive China trade rhetoric. Likewise, I think at this point, the market wants to kind of remain very neutral as we head into what is an unforeseen jobs number. The ADP number a little bit weaker than many had hoped. And jobs right now, again, have not been the problem. With all the economic talk of weaker global growth and PMIs, jobs have not been a problem. So right now, jobs likely to come in as expected, but today's ADP, not so. Market volatility has been kind of waning. We saw it get a little bit of a spike yesterday on the dip down to 170 yield, but then we moved back up. Things started to go down initially, but then started to go back up again. So the fear of breaking out of the range is what caused volatility to go up, and then volatility, which has been very directional with yield. Higher yields equals higher vols, lower yield equals lower vols, unless you're threatening to break out of the range. So at this point right now, we saw a modest uptick. We're hovering right around the 14-day moving average, so it's not like we're seeing a spike. But again, they're holding their own, and a lot of it has to do with what we have coming up ahead. Not only do we have the jobs data coming out Friday, we have this continued China-U.S. trade deal, whether they're going to continue to talk about tariffs or non-tariffs or take them off the board altogether. Likewise, you have a Fed meeting next week where they're not expected to cut or raise, and they are expected to kind of give us an outlook for the first quarter of 2020, which at this point looks very quiet. We also have an ECB meeting with Ms. Lagarde takes the gavel for the first time, and we have the UK elections, which could be a big one, although the Conservatives right now are favored to win. So at this point, I think that a lot of what we're seeing as far as range-bound trades holding in the middle, you're seeing it not only in rates, but you're also seeing it in gold. Equities are kind of on a planet all on their own. They kind of trade up on good China news, down on bad China news. And I think at this point, though, the riskless assets are waiting for some kind of confirmation, which they may or may not get. But I think in the period of the next 2 weeks, you could see bonds trading north of 190 yield or south of 170 based on what we get not only on the jobs number, but what we get next week with all the central bank meetings as well as the UK elections. So a lot kind of hindering on the market, but we aren't going to see it today or tomorrow. Friday begins a lot of news, and we always have the China-U.S. trade thing hanging over our head. Today was a good day, but tomorrow's another day.